This implosion, I will submit to you, Scott, is much better for us than people think, because now if you're telling me we're basing out in the 80s and a lot of the stuff that was wrecked is cleared out of the market, and there's been $4.5 billion worth of OG selling in the last 6 weeks, because that looks like what the numbers are, and that's already past us, I'm telling you those are good things. When the venture capitalists come out after their restrictions are over and they come out, and now you have this brand new ownership base of something, it's typically very good fundamentally. So said differently, you want less concentration of ownership in Bitcoin and more diversity. And I think we're getting that, plus the unlevered or the deleveraging that took place. So those are reasons to be very bullish if you're a long-term investor in Bitcoin.
Scaramucci begins with an important reminder. Markets rarely move the way we expect them to. Earlier in the year, sentiment pointed decisively upward. Bitcoin rallied explosively after the U.S. election, breaking through the 60s, surging past 100K, correcting in April, and then blasting through into the 120s. Everything appeared set for a push toward 150K. But as Scaramucci stresses, markets have a way of humbling everyone.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I see this thing very, very long term, but let's just step back and talk about some things that have happened. And so, you know this and I know this, but what does happen is whatever you think is not going to happen will happen. So the trade was set up for, we're going to 150, 200. We had an explosive post-Trump election number in November. We were in the 60s. We shot right up to 100. And then, we had our little correction in April, and we shot back through those numbers into the 120s, and so people were like, okay, we're set up and we're on the march to go higher. But what happens is the unexpected. A lot of OGs in the space sold. Yeah. And I don't know the exact data. We could go over it together, but there were OGs that said, yep, I've owned this thing since 2008, 9, 10, 11, whatever it was. I'm going to buy a yacht or a piece of a sports team. And so we were absorbing that. But on the road to absorbing that, there was some over leverage in the system. So when Trump came out with that China tweet where he said that he was upset with the rare earth deal, it pulled a pin in crypto. And that happens when you have too much leverage in the system. And so you had the massive deleveraging, group linked to TradeFi. I don't know who, but a group linked to TradeFi got hurt, and they began a process of systematic liquidation of inventory and clearing out things alongside of OG selling, which led to, whether people like me saying this or not, it's a garden variety, Scott, crypto correction. It's a garden variety Bitcoin correction. The altcoin stuff is separate. Okay, so my opinion on the altcoins, and again, some people in crypto who love Donald Trump are not going to love me saying this, but I think he crushed the altcoin market. And I'll tell you how he did it. He entered the altcoin market with a meme coin prior to the inauguration. It sucked a lot of liquidity into that meme coin. Then that meme coin busted or combusted like other meme coins are wont to do. And he caused a regulatory slowdown. This implosion, I will submit to you, Scott, is much better for us than people think, because now if you're telling me we're basing out in the 80s and a lot of the stuff that was wrecked is cleared out of the market, and there's been $4.5 billion worth of OG selling in the last 6 weeks, because that looks like what the numbers are, and that's already past us, I'm telling you those are good things. And as a TradeFi person and an institutional person, I can tell you that I look at those OG people like venture capitalists in a stock at an initial public offering, meaning when the venture capitalists come out after their restrictions are over and they come out, and now you have this brand new ownership base of something, it's typically very good fundamentally. So said differently, you want less concentration of ownership in Bitcoin and more diversity. And I think we're getting that, plus the unlevered or the deleveraging that took place. So those are reasons to be very bullish if you're a long-term investor in Bitcoin. So I'm a buyer this week.
It's the heaviest buying I've done in as long as I can remember.
Okay, but I'll confess to you, I bought earlier in the week, and I thought I was patting myself on the back, Melker, at 93,000. Okay, so obviously I didn't catch the bottom, but I'll probably buy some more next week. Okay, just want to see where things settle out, and I've got some firepower, and I want to own Bitcoin for the next 20 years. If I'm on the planet, I want to own Bitcoin, so that's where I intend to be. Okay, I said we were getting to 100,000. Bitcoin was 69,000. It was November of 2021. I said, we're going to be 100,000 by March.
I did that too.
And we imploded. Okay, and then I said, okay, we're going to be back at 100,000. And then we didn't get there, and because of the regulatory headwinds. So now we're sitting here at 85,000. I'm going to maintain my $150,000 price target. Are we going to get there in 6 weeks by the end of the year? I would say no, we're probably not going to get there. I got that wrong again. But Bitcoin's not what you love about Bitcoin. What I love about Bitcoin, it's on nobody's schedule, and Bitcoin doesn't care about your price prediction and doesn't care about what you and I think. And it's certainly not tied to the calendar. So if Bitcoin got to 150 by March as opposed to December, okay, you could say that I was wrong on my price prediction, but I'm not really wrong on my trajectory. And if you said to me that Bitcoin's going to be 200 at the end of 3 years, which I think is a very likely scenario given everything that I'm going on, you know what I mean? And I think the disconnection really was the leverage in Bitcoin and the leverage in the crypto market, which caused a cascade last month, and we're getting the aftermath of this month. But if you said to me, let's say I just landed from Mars, had been out of the market for 5 years, and you were debriefing me, and you said, hey, we've got an administration that's pro-friendly to crypto, likely to get some legislation passed. There's 11 ETFs that cropped up, BlackRock having the largest one. Bitcoin went from 16 to 126. Anthony, it's now back at 84. And the fear index is 7. Okay, and the overall aggregate index, if you marry the stock fear index, Scott, with the crypto index, is 14. These are literally all-time lows. I'd be looking at you saying, okay, I gotta raise some cash here, and I gotta buy some Bitcoin. And so that's what I'm doing. And so, again, you gotta step back from these things. But listen, if I bought Bitcoin, I had my first Bitcoin, I bought at 126, let's say, or 125. My message to those people is, okay, if you have some dough, average down here. This is a good opportunity. But what happens is people buy, and then if it doesn't go in their direction, they get skittish or they get nervous.
Scaramucci then moves to macroeconomics and doesn't hold back. He argues deficit spending is simply unfunded tax liability. Governments will not raise taxes sufficiently. Instead, they will rely on inflation to pay back growing debt. Inflation is a form of regressive taxation. It destroys purchasing power for the poor and middle class. This erosion of trust in fiat money, Scaramucci says, explains rising populism, rising polarization, loss of faith in institutions, and why Bitcoin's properties, limited supply, decentralization, and mathematical governance make it a viable long-term hedge. Scaramucci concludes with a generational view. Central bankers today are 60-plus years old. They grew up with gold, not crypto. But the next generation of policymakers, asset managers, and institutional leaders, people currently in their 20s and 30s, have grown up in a digital world and 80. In 15 to 20 years, these leaders will prefer Bitcoin. They will trust digital scarcity over physical gold.
The question is, am I right? Are we going to 150? Or is Peter Schiff right, or are we going to 0? Okay, and so what I love about Peter, every time something happens, he comes out of the woodwork. Even though he had the chance to buy Bitcoin at 10 cents, it's now 84,000. He's right, everyone else is wrong. And so it's part of his marketing shtick, and I get that. But if you tell me what do we got going for us, just 3 quick things. because I wrote these down. If you don't mind, I'll just share them with you. Digital assets are becoming a core institutional allocation. That is happening. Talk to Robbie Mishnick at BlackRock. Talk to financial consultants, financial advisors. That is happening. Okay. The blockchain. If you follow Larry Fink around, he is literally on a bully pulpit, standing there talking about the tokenization of assets. And so again, the blockchain is quietly going to replace the financial plumbing that's going on. We're already seeing things like tokenized treasuries. We're seeing things. I tokenized a fund on Avalanche.
Yep.
Okay, and I think you've got Avalanche and the subnets of Avalanche, Solana. You've got things like Ton, even Ethereum, are going to be part of the infrastructure and the financial rails, whether people like it or not. And let's talk about Bitcoin for a second. The supply shock in Bitcoin, in my opinion, is now structural. Okay, you're at 19.7 million mined. Okay, so you've only got 1.4 to go. Okay, ETFs are being bought by sovereigns. The halving, again, we're gonna have another halving before you know it. I think that's going to also help the supply curve of Bitcoin. And so for me, I don't know. I'm watching deleveraging, and I'm watching a little bit of a tech wreck for crypto, which is ahead of the tech wreck for stocks. And I like it. I'm not really amused by it. I'm not really plussed by it. I'm not ready to pull the alarm bell yet. And since I'm Italian, Melker, and I've said one last thing 4 times, let me say one more last thing. If you and I were on this program together and it was January of 2023, and let's say you took out a crystal ball and you looked at me and said, Mooch, November, it's going to be the 21st of November, and it's going to be 2025, and this $16,000 Bitcoin that we're looking at is going to be 84,000, it's going to be 5x. I'd see it in my crystal ball. I would have given at least 1 testicle for that, possibly 2 and a kidney, okay? And so for people to get crazy about this, what are they talking about? Okay, well, you and I were underwater getting our asses kicked
Oh, it was so bad.
less than 3 years ago. Okay, but Mooch, it was at 124, so we should now be in a depression. So, that's how I see the whole thing. Gold is old. Okay, don't forget that. Gold is old. If you're a 100-year-old fossil, okay, you're buying gold. You're not buying Bitcoin. If you control a central bank, you're not the 25-year-old controlling the central bank. You're the 65-year-old. You're buying gold. You're sniffing down still at Bitcoin. But remember, there are people younger than you, Scott, that are someday in 15 or 20 years going to be in their mid-40s, and they're going to love Bitcoin more than they like gold. They're going to say, wow, Bitcoin, gold is good, but Bitcoin is way better. And they're going to be shifting into Bitcoin. And you and I are early. I don't want to miss that. But gold is definitely trading on the macro topic of currency debasement. People are looking around saying, whoa, unsustainable deficits everywhere. There's only, look, take this to the bank, Scott. Deficit spending is unfunded tax liability. So anybody that says otherwise, they don't know what they're talking about. There's no free lunch. You want to borrow the $2 trillion, absolutely no problem. You're going to have to pay it back somehow. And so we've decided that the way we're going to pay it back is through the most pernicious and the most regressive form of taxation. That's inflation. We're chicken shit. We're not going to tax the people at a level that they need to be taxed at to give them the services. But what we're going to do is we're going to inflate and destroy and debase their currency so that we can pay it back with dollars that are worth less than the ones that we borrowed. But that kills the middle class. It kills the lower income people because those people typically don't have any assets. And so you're taking their time and their energy. That's why they're turning towards populism, and that's why they're turning towards they're turning towards the politics of envy. But to me, Bitcoin solves that. Bitcoin is a potential solution for that. So any which vector you want to go, fourth turning, macroeconomic depression, currency debasement, Bitcoin sitting there And Bitcoin is something you're going to look at and say, okay, I got to own some of that.
Anthony Scaramucci's message is clear. Volatility is not a failure of Bitcoin. It is a feature of an asset transitioning toward global institutional adoption. Corrections expose leverage, disperse ownership, strengthen foundations, and create new buying opportunities for long-term investors. The macro environment of inflation, deficit spending, and weakening trust in traditional financial systems only heightens Bitcoin's long-term relevance. Meanwhile, institutions, sovereign wealth funds, and asset managers continue building deeper exposure. The short term may be uncertain, but the long-term trajectory remains unmistakably upward. And as Scaramucci reminds us, Bitcoin does not run on any one schedule. It moves according to its own mathematical destiny.